The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have? Well, the S&P's off 28 after being down 45. Dow's off 278 after being down 500. The NASDAQ down 80. What was it down at the max? I don't remember that right off the top. I don't even have it. Or do I? There it is. Okay. Well, it looks like it was down another 68 points from here. So pretty good pop down. Everybody's probably assuming that maybe we've touched some kind of low today. I suspect that low in the indexes to come through in the next couple of days, but I don't think we've made it in the index yet. I did see one stock that I love the way it was acting. I know it's got massive short sellers in it, and I think that this one getting in it today for a long-term play was the thing to do. And so far, we've been rewarded for acting when everything looked the worst. But that does not mean that the indexes are done. They could float around here for a while. In fact, my sector oscillators that I use all show that we are looking for some kind of significant low in the markets. And by significant, I mean where we could have another 20 or 30 days going higher before anything changes. We are getting to that point in the calendar where we're going to get into fund buying. That starts next Wednesday, Thursday-ish. So we're about 5 days away from that. I could see that we could make some kind of low, maybe Monday, Tuesday, somewhere in that way. Looks like fund flows are going to actually be positive this month. And that may put the worst behind us of the selling of a lot of the tech stocks. So we'll have to see that. But the things have changed. And, of course, every time the government does something, president does something, the Congress does something, someone does something, it's all about reordering priorities and which stocks will do the best with those priorities changed. Today, everybody is wetting themselves on CNBC and soiling themselves. I feel like I should be long adult diapers sometimes. But they're all yelling and screaming the end of the world is coming. It just can't be any more breathless the way they talk about how everything is a 10. And it just wears me out. Of course, I don't listen to them. I either go closed captioned or turn it off totally. But you can see it. It's one of those things where literally everything's a 10. There's no 5s, no 3s, no 7s. Everything's a 10 or everything's a 0. It's either meaningless or existential. And I think it took me a long time to figure out that with money at risk, I was probably better off being a little bit tired and cranky than always agitated to the max. Always like a couple of traders I'd met along the ways. One guy I called Iceman for the call sign in Top Gun, just because literally you couldn't get the guy to register anything. Missiles headed to Washington, D.C., film at 11. That was about a 1. And he seemed to do pretty good because didn't really bother him about anything. Of course, he wasn't the life of the party either. So not somebody that you could rev up or that loved a bunch of stuff. The guy was just kind of a blob, but he was a good trader. So maybe there's some kind of happy medium where you can actually feel something. You're not a robot, but at the same time, you're not highly susceptible to people and their hysteria. I always loved, trying to remember the guy's name. Can't think of it right now. He's an attorney. But he calls HLN the Hysterical Ladies Network on cable. And man, it's been forever since I've seen it. But they always had that one gal on there. What's her name? Something Grace. Literally everything was a 20. I don't know. I always liked, of course, what was that mockumentary where they wanted to turn the amps up to 11. They went to 10. They wanted it changed till they went to 11. I think that's kind of the idea of trying to get people to watch you on cable financial TV. I know I may put a few people to sleep, but at the same time, if I join in the hysteria, I don't know if I can make any good decisions. Hard to tell. Anyway, we'll get to the market, which is already in progress. As I said, I think we've got a little bit of time. I'm not rushing. I like some of the positions I've seen here today. We'll see if these things hold up. But in long-term positions, I've got to give people kinds of a heads up, because I suspect that they may not be able to actually put these trades on or take them off before the next 24 hours. So they're a little different than doing a daily trading newsletter. For the most part, there's not a big hurry to get in and out of these trades, and I pick them as such. So you can go into your things like 401ks and know that you can, you don't have to worry the next 5 minutes what happens in the charts. But I've been waiting for one for a long time. What, 4 or 5 months maybe? Been that long? Something like that, maybe 3 months, to get back in one of these stocks. And I got back into it today. So we'll see on that. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And you can do a message in the den if you like. Anyway, looking forward to it. Had a big reaction to the paper on the 3 drives to a top. You can always email me today if you forgot to yesterday, and I'll be glad to send you the link. If you have any questions on that, because I sent a bunch of them out, if you have any questions on that, a good topic to call in while we're waiting for these markets to give us a decent signal that a bottom is in and it's time to act. In fact, I'll probably be spending a lot of time tonight looking at charts, looking for equities to buy. I don't know if I'm going to be buying an index so much as looking for outperformance in individual stocks, just because, well, we've talked about it before. Options are not telling me that there's a giant bias one side or the other for the indexes. So I'm going to be drilling down into sectors and then into the equities for what I'm hunting for, what we're trying to mine in the next few days. But we'll be back, a little bit of history, and then we'll start looking at some charts.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Well, let's do a little bit of history and a little news, and then we'll get into some charts.
Then it's all just a little bit of history repeating.
It is nothing but history repeating. And on this day in 1960, the first patent on a laser is issued to Arthur Leonard and Charles Hard Towns, who assigned it to Bell Telephone Laboratories. Still, no one has figured out how to attach these lasers to the heads of sharks. Throw me a frickin' bone here. In 1917, Einstein proposed the process that makes lasers possible, called stimulated emission. He theorized that besides absorbing and emitting light spontaneously, electrons could be stimulated to emit light of a particular wavelength. And of course, the most important part of lasers is that they are coherent. That is, that they take and line up all of the waves together. So I think about this coherent issue a lot with the stock market because, you know, you've got a few things. You've got NASDAQ and the small caps and the S&P and the Dow. The moves always are great when all of those are talking together, all making lows at one time or all making highs at one time. When half of them are one way and half of them are another, kind of tough to figure out which way the market's going in general. And certainly you don't get the kind of peaks and troughs you get when everybody's selling and everybody's buying everything. But that's why lasers are so much good. A 2-watt or 1-watt laser can blind you. A 200-watt light bulb can't, or even a 500-watt bulb can't. Might burn your face. But putting all those things in together, walking in lockstep, pretty powerful thing in lasers or in the stock market. On this day in 1960, we see the fruition of theory turned into practice. Okay, now some of the other stuff going on that we, especially in technology, need to know about. in May 25th, the GDPR, which is the General Data Protection Regulation, goes into effect in the EU. This is going to give citizens control of their personal data while imposing strict rules on those hosting and processing this data. We see that, of course, already today in the Facebook news, anywhere in the world, actually, if they do business in Europe. The regulation also introduces rules relating to the free movement of personal data within and outside the EU. Again, this is going to, it's kind of hard not to, have something mixed with something else if you do it as a worldwide contract. But everybody from Google to Apple are all going to have to be under these GDPR regulations. And it's going to be a big deal. We are seeing a change in these global FANG stocks that were heavily in working with the data of companies. The only one I think that doesn't is DuckDuckGo.com. You can search there, and they say they don't actually save anything. Whether you're dealing with Microsoft Bing or Google, these guys, you are the product. And this is going to mean at least some way that maybe you're going to be a little less of a product for these companies. There was a guy out spouting that if Facebook had to live up to these regulations in the U.S., that their profits would be down some 60%. I've heard a lot of people talk about whether or not these things are moving lower. And I can't say right now because it's all about what Congress decides to do, and maybe they get distracted with something else. They're kind of like babies. You shank some keys over in this area, and they'll start looking over there. But for the next 2 weeks, I think, unless something happens, it is going to be kind of the focus. I always ask people one thing, and that is, who was the happiest guy on 9/11? Because most people don't even think about it. There was a congressman accused of murdering his underling that he had a relationship with. For 3 months, he was hounded by fake news people at CNN and others, but mostly CNN. Maybe some of those hysterical ladies on HLN. We found out later that he had absolutely nothing to do with it, but it didn't matter. For 3 months, they hounded him. And what happened? 9/11, never heard about Gary Condit again, other than the fact that they had arrested another guy that had done the exact same thing, and that they knew that this guy had done the exact same thing, other than kill the lady a couple of months earlier. They just choose to ignore it because they like going after this guy. And I guess maybe as a politician, you should sign up for that when you start. But we all know it. But you never know what's going to come out of the news to change the short attention span of the press. But I think that we're going to get it. Now, we haven't got anything in the way of movement in this yet, but there are going to be hearings in the next 2 weeks. What we did have is that there was a bill being held up in Congress about controlling web hosting companies. That actually passed yesterday after everybody that was opposing it, basically a handful of senators and congressmen in California. This is a thing called the Policing of Sex Trafficking Act, and means that if you have a website and host where people are either advertising for prostitution and or sex trafficking, you can be held liable. In fact, you could get up to 25 years for making an electronic version of this available. Why? They could do literally nothing to you if you did it in print, which is kind of a little, I understand the whole thing of free speech. And I'm wondering whether or not this thing will test the test of time once it makes it eventually, I'm sure, to the Supreme Court. But in the meantime, 97-2 in the Senate with the to a couple of people you wouldn't think of other than the fact that they vote no on everything. So it wasn't a whole lot. Probably a good thing. I'm always worried about the bigger unintended consequences. But this is the first dent in a law that was passed back in 1980 as I think in 80 or 82, when they started to see that this internet thing could be a big deal. They passed this law that basically said, as a host, you're not responsible what people do on your website or what they post. This is the first chink in that rule, and probably not the last. I've always talked about once the nose of the proverbial camel gets under the tent, it is an issue. Look for more government oversight in Facebook, Snapchat, Twitter, Google, all the rest. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Omeros Corporation's the big winner today. This thing got up to $18.20. Looks like pretty good stuff happening with their cancer drug. Huge volume, big move. And again, you know, we're looking for sectors that aren't going to be incredibly affected by trade wars or changes in the strength of the dollar or tax policy. And you can look at a few of these things. I suspect that's one of the reasons why the IWM, let's take a look at, it's off 1%, but what do we have in the other ones? Off 1.5% on the S&P and on the Dow, and what off on the, 1.5 on the NASDAQ, but Russell 2000 just off, 0.7%. So actually holding up better than the rest. And you got to take a look at this and what's going to be moving in the futures. But this is a great day for a stock trader if you can sit back and separate the wheat from the chaff. What's strong today and what's weak today, and then wait for the bottom and see that the whole market turns together. But we'll see. We're at 2670 on the S&P cash. When we had a couple emails asking me about what volume's looking like, it's not big. We're down less than 2.2 billion shares on 2.2 billion shares on the NYSE consolidated tape. For me to think that this was a huge trend starting, I'd like to see probably 2.8 to 3 billion shares at this time. We don't have it. If we want to look at the CBOE market data summary, which if you want or need something that has all the market data together, you can always email me. I'll send you the link to it. But we're at about 4.5 billion shares on that. We had about 7 billion shares on that yesterday. And that's everything. In fact, one guy sent me something last week, or I saw something, I can't remember what it was, but it was somebody about saying how volumes don't work because everything's in the dark pool. Well, this has all the volume, including the dark pool. It's not hidden anywhere. I could pretty much tell the guy had never traded volumes, or he didn't do much. One of the problems with trading volumes is a lot of people say that they trade volumes, but they don't. It certainly, if you track them, it would be hard to figure out how they were saying that volume actually was the most important thing they looked at. I look at it a little different. That is that it's not over a single day, that it is the high, the low, and everything in between. One of the reasons I have that power law vector indicator is to give me an idea how it came down, a quantifiable way, a way to measure it that doesn't mean or put my own biases into effect. So anyway, when we look at the volume out here, if we get to 7 billion shares today, I think it's going to be fairly interesting. But we are on a Thursday going into a Friday, and everybody's in a rather sour and dour mood. As I said, I wanted to go long adult diapers for just watching 5 minutes of CNBC today. They're all henny penny, the sky is falling, which is good. I like it because I think a lot of people pay attention to that. That may mean that they do something stupid, which I will capitalize on. And that's always an interesting thing. Anyway, NASDAQ's off 100, S&P's off 40, the Russell's off 12, and the Dow's off 416. So let's take a look at some of the other stuff going on today that I think is interesting. Yesterday, we talked a little bit about not Dun and Bradstreet, Deutsche Bank. This has continued to move lower. As we said yesterday, they've got an IPO coming out tomorrow, and I'm wondering how this is actually going to react when we get to that longer time frame. Oh, crap. That's what it is. Okay. Okay. Again, we were talking about that 3-gap play, and here's a beautiful example of how these things can get filled in a hurry in Deutsche Bank. I would not be surprised to see in the next 2 weeks this thing down at 1150. It's broken its top. It came down with more energy than it actually went up with over a long period of time. You're through the first gap. You've got the second gap at 1350. This last gap's at 1150. I would not be surprised to see a lot of action in Europe in the coming weeks. I think we look a lot better. Now, something could happen. I would change my mind. When the facts change, don't you change your opinion, sir? Always like that from Mr. Keynes. He said, you know, if things change, I change my opinion. I'm not stuck with it. I'm not married with it. But I don't see anything so far today. The volume's not good or big enough to make me think that we've got some kind of blowout lows coming. But I do not see a sign that it is time to go long the indexes either. But I think we could see that in the next couple of days. In fact, my sector oscillators are all kind of lining up. And generally, when they hit levels as they are today, you normally have a fairly decent low in within the next 3 trading days. So we could go Friday, Monday, Tuesday is probably somewhere in that range. We're going to get a fairly decent signal, and that's going to be it, at least for at least the short term. Then we're going to have fun buying into the end of the month. I believe that this month is going to be different in that we're not going to have fun outflows. Anyway, Deutsche Bank into these 3 gap plays. If you got one of those, one of my articles that I sent out yesterday for 3 gap plays, keep an eye on this one because this one is pretty much doing exactly what the 3 gap play does, which is when it fails, it just goes and really quickly fills all 3 gaps on it. And as I said yesterday, these things kind of got distorted like a lot of things in QE, but they are coming back in a and with some fervor. Dropbox IPO. We talked about this, I think, a few times, but you know, are you somebody on the line?
Yep.
Go ahead. Oh, I see it up there. It split on the line, so I didn't see it. Don from Virginia, how you doing?
Hey, hi, Dave. Hey, I'm looking at Dart Restaurants, DRI.
Yep.
Looking to get in here. It's pulling back today. It missed it.
Didn't they have earnings out this morning?
You're right. It beat the earnings, and same deal. It beat the earnings, but it was a little low in the revenue, what they expected. But what do you think? I'm thinking of getting in here.
You mean today?
Yeah. On the pullback.
I think I'd probably want to wait until the tide and the wind were at my back. So are you speculating that the S&P and the NASDAQ have made lows today?
Short term.
Okay. I am not. So that's why I would not probably look at this. Can you hang on through the break? We're going to be back here in just a minute or two. The first thing you have to do on one of these things, normally when these things blow out, I want to give them 3 days. We'll talk about kind of a 3-day rule that I learned early on in trading. And then we'll talk about what you need in the way of consolidation before these things start moving back up. But we'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, hopefully we're back with Don.
Yeah, hi, Dave.
Okay. First thing I learned from trading these gaps, ups and downs, was to hold my breath and wait and count for 3 days.
Okay.
And I think we've talked about this before, but if anybody is leveraged in a stock and it quickly goes against them, you've got margin calls. I don't know if there's going to be any in these, maybe a few, but it is rare to see a stock gap down and change direction within those 3 days. I think people, whether they're there or not, just know that maybe there'll be a few. So we'll go ahead and just make sure that the stock doesn't go anywhere for 3 days. So that would be the first rule that I do. Any big gap up or gap down, I don't do anything for 3 days, because there are probably people that are on the wrong side of this trade and may get margined out. So I want to get those folks out in the first part. The second part is whether or not the indexes have bottomed. What do you think the reason is, or is there a technical reason that you think that the markets are bottoming today and maybe not tomorrow or Wednesday next week?
Well, yeah, that's it. I figured, like you said, with the fund buying by Wednesday, I would think a bump. So I figured I did it here at a good low price, and it might go a little bit lower, but eventually it's going to go back up. I'm sure. It's it's kind of like you were saying. Here's a restaurant, so it's not going to be affected by the tariffs and all this other stuff. All this other noise. And
yeah, it is. That part is true. The part about people going to restaurants is probably a bigger issue, and they've all been kind of weak over the last few weeks, which is kind of surprising. I think these prices were a little high, assuming that people were going to take those lower deductions out of their paycheck in February and go to these restaurants.
Yeah, that's what I was thinking. Yeah.
And that didn't happen.
Okay.
They spent the money elsewhere. I think that's what you saw in this pop down today.
Maybe
so I'm not
couple
saying
weeks you'll get hungry, or after a while you gotta get hungry,
Yeah, or maybe get a couple of months under their belt with that cash, and they're going to go, hey, I got some extra money at the end of the month now, so maybe I'll go ahead and spend it. Maybe they just didn't feel like running out right away.
Yeah, who knows what people are going to do?
Well, you don't know what a person can do. You can know what a lot of people are going to do, and you kind of look. I wrote about it this week in my newsletter, which is James Wyckoff called it the composite man, kind of the average of everybody in the market.
Mm-hmm.
But to me, it would be, at least for me, not saying I'm going to be right, but one, big gap down, give it 3 days.
Okay.
For me, I would also say that your odds of buying it tomorrow at the close are better than buying it today overall.
Okay.
If I'm looking at a stock and know that I've got 2 times where I'm generally better off either going short or long, and statistically, I've been able to back that up, and that is somewhere after 2 o'clock on Wednesday and somewhere after 2 o'clock on Friday. So even if I was going to think that I wanted to buy this today, I probably would wait till the close on Friday, because again, everybody's on the wrong side of it. I don't think anybody's going to rush in to buy it. So I don't understand getting it today when I could get it tomorrow at the same price and not have to worry about any additional risk, like another gap down. And also, I'm going to gain some more information on how this is actually selling. You know what the short interest is on this?
No, I don't.
Okay, do I have it here? Okay, give me just a second. Okay. Okay, you got 5 days to cover. 5.7% of the short float, which is okay, especially for a stock like that. So my guess is that there's enough of these people that are short that we're going to hear downgrades and everything else and the other harangue. I would just say that if you were thinking about buying this, I would probably wait till Wednesday of next week. Wait until you see the whites of their eyes for fund buying. I don't see any reason why there is the need to take risk if you don't think it's bouncing tomorrow. Do you follow me?
Yeah, certainly.
And
I
if
just
you
noticed
think
a lot of times on these stocks where they miss the they make their earnings, they miss the revenue a little bit, and but then they bounce back up in a couple of days. It seems like to me, but
yeah, it's more like a couple of weeks though, isn't it? It's not like a couple of days.
Maybe you're right. I don't know. I guess I'm getting too trigger happy. I haven't traded for a couple of weeks, and I've been listening. Listen to you every day. I'm listening to what you say about waiting for pullbacks, and I thought this.
I think we got some. I'm not going out on the limb unless I see test something on a lighter volume. In fact, there's a handful of stocks out there that are doing that already. And those are the ones I'd probably be looking at. You came down and you blew through the gap up with 4.8 million shares, with 3.8 million shares today. So by the end of the day, you're going to match that gap up on the 19th of December. So again, this would probably be one that I would pass on just because the energy on the way down is fairly good. Normally, if the energy on the way down is big, even if you have a gap like this, if it's going to bounce, normally if the volume's light, then you can look for a bounce. If you don't, the best you can normally hope for is some kind of consolidation. And if this thing went sideways for like 10 days, then I would be looking hard at maybe buying it for what I do. But for me, I just can't imagine either one waiting at least till Friday afternoon and see what you think then. And if you don't like it on Friday's close, maybe even wait till Wednesday afternoon, and you can look into fund buying. You get past the 3 days of anybody on the wrong side of this stock. You also get past the people that are covering this stock. And generally when they're covering it, you hear the echoes of downgrades and how this is going to be the end of the world on this stock and everything else for the next 3 days on CNBC. And then once those shorts cover, suddenly you see it bounce. So to me, I think that if you like this, then you probably just want to hold your breath, put your hands in your pant pockets, and just do everything you can to hold your breath. I'm looking at the general markets today, and you're probably off something, but man, I would so much like the market better is if we go down just a little bit tomorrow in Friday's close, and the volume really shrinks. The volume's not good today already, or I would be yelling and screaming you to stay away from this thing at all costs. So I get where you're at. I just think maybe you're a handful of days in front of you. Okay.
Thanks a lot. Really enjoy your show, Dave. Thanks a lot.
Okay. Bye.
Bye.
We'll be back in a minute. We'll close the show.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And so we got a question about Dropbox. I talked about it, I think, this week, but again, if it happened more than 30 minutes ago, I probably forgot exactly what I said. But my belief in these stocks going up against the behemoths of Amazon Web Services and Google's Web Services and Azure from Microsoft is that exactly what the LinkedIn guy finally figured out. And that is, if he didn't have a big partner, he was going bankrupt. That he couldn't do it by himself. Now, maybe, as we said, maybe some of these restrictions lead to some other things like antitrust stuff. If we saw some of these guys busted up, like Amazon Web Services, maybe has to split from the rest of Amazon. Maybe if Salesforce or some of these other guys find some antitrust stuff, I think that Dropbox looks a lot more attractive. You have to bet, at least my belief is, in my opinion, is you have to bet that Dropbox is going to get bought out. Unless you see some kind of rapid change for antitrust, they don't have a snowball's chance. You've got 4 BMOS, not just a handful of them, but 4 giant billion, almost trillion-dollar companies in the level of Apple and some of these other guys. And other than getting bought out, they can't win. We know that they can't win. There's just the incumbents have too good a position, and it's not like he's going up a single company. He's going up against 3 of the biggest or 4 of the biggest companies in all of the world that have enormous amounts of cash coming back into the country. They're going to have to raise cash. It won't be anything for these guys to drop $1 billion or $2 billion on something else. So if you're betting on Dropbox or betting on a buyout, it might be. In the meantime, sell when you can, not when you have to, and we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.